Good morning, I'm Blain, strategist with Shard Capital. Well, here we are on one of the coldest days of 2021, and we've just woken up to the news that 2020 was one of the warmest years on record, only matched by 2016. Now, most of us accept that climate change and global warming is a real thing. The science all says it's happening, and we know that in order to prevent global catastrophe, we have to address that. Some of the studies that have been done show that by 2050, if we do nothing, then rising sea levels and changing temperatures, driving storms and other weather events will create somewhere in the region of $1.5 trillion of damage to the global economy every year. Now that's the equivalent of something like a Hurricane Katrina hitting the market every single month. And remember, Katrina cost the markets $165 billion in damage. Now, we're addressing that in the UK by aiming for climate neutrality. And one of the things the government will tell you is how successful our programme to build wind farms has been. And just yesterday, it was announced that we're going to double the size of one of the biggest UK wind farms. And the government is proudly telling us just how successful wind is as a resource for the UK in making cheap, effectively almost free electricity, and it's going to allow us to stop burning gas and coal and save the UK. However, as I've shown in a number of my recent morning porridge commentaries, the economics of wind farms don't really stack up. Yes, they're rather excellent looking things, but the problem is if you put them out at sea, they're very difficult to maintain, and over time they get less effective, and because they're difficult to maintain, the actual power slips very quickly. And it's been discovered that if you look at the balance sheets of the companies, that the true cost of power is much higher than we thought. Now sadly, that is becoming true of many of the renewable power sources that we've been putting our faith in for saving the planet. Things like solar power are very effective if you put them in deserts, not so great if you're trying to power up a station in the middle of winter in the Arctic Circle where they don't work at all. But we've also seen bubbles begin to develop in new power technologies. A very good example of that is electric vehicles. Yes, electric vehicles will help reduce carbon emissions, but long term they rely on lithium, and that's a very scarce resource. The price of lithium is going to go through the roof because we know that we're expecting many more electric vehicles, yet already half the lithium and rare earths on the planet are used to make electric car batteries. And most of these electric car makers, well, none of them are actually making much in the way of profits. So if they're ever going to get profitable at a time when more and more of the established automakers are introducing electric vehicles, they're going to have to increase profits. And that means by pushing up the price that they sell the cars, which means the price of batteries is going to go up. Electric vehicles is just one example. I'm also concerned about everyone expecting that we're going to switch to a hydrogen economy. Now, hydrogen is a great idea. It is very clean, but it's very difficult to obtain. And we're thinking about what we call green hydrogen, which you make by using energy from renewable sources to break down into hydrogen and other products. Taking it out of water, you get oxygen, so it's clean. But hydrogen itself, it's very difficult to store because it's such a tiny molecule, it seeps out of everything. It's also, as the Hindenburg warned us, very inflammable. And to introduce a hydrogen-based economy will require massive new infrastructure in order to use it and create areas where you can fuel things like fuel cells. It's not something that happens simply, and the costs to make it happen will push up the actual costs dramatically. Yet, the whole market is anticipating that we potentially have a almost cost-free hydrogen economy in a few years' time. One of the other areas that people think might rescue us is the remarkable ability of fusion power to produce cheap fuel that is free for everyone. However, we've been talking about fusion power ever since the first H-bomb went off, before even I was born, and it still hasn't happened. The great joke amongst environmental and green economists is that fusion power will happen tomorrow. Tomorrow is always just a day away. Now, the real issue with green economics is that, yes, we do need to decarbonise the planet. How are we going to do that? Well, funnily enough, it doesn't actually have to be the really expensive things like electric vehicles, hydrogen energy, putting out offshore floating wind farms. Much more effective at absorbing carbon will be the really simple things. And one of these, and I urge you to watch a very good Netflix documentary about soil, is getting the soil to be improved so it absorbs more carbon, which has the benefit of making it more productive. Planting more trees is probably the most efficient way to scrub carbon dioxide out of the atmosphere. But also there are a host of technologies that are currently getting ignored by the market because they don't look sexy or exciting enough. Simple things like acknowledging that we will not get the power we need out of renewables in the next 30 years, but we could go and decarbonise fossil fuels like coal and gas. That's maybe another way forward. Anyway, the whole point of this morning's porridge is just to simply ask people to think about not the need to decarbonise and address climate change. I think we all acknowledge that. But what we really need to do is work out the economics of what will actually work. You can read all about this on my morning porridge this morning. Thank you all very much for your time.